Alrighty guys, welcome back to the Best Investing Money Management channel on YouTube. We haven't done a sit down video in a while. So we're going to be talking about Tesla stock, one of my favorite companies ever. So I hope you guys enjoy it. If you guys get anything in value out of this video, hit that like button, subscribe to the channel. If you have any questions, concerns, make sure you guys go ahead and ask them down in the comments. So starting off, kind of what's been going on with Tesla. Well, if we look at their chart here, you will notice that we've seen just a lot of volatility with an upward trend, right? We had this absolute beautiful upward trend, but really year to date, ever since about January, we've seen a lot of up and down with Tesla, where it might pop up to 1200 but sell off back down to 700 and then back up to 1100 and then back down underneath $700. And a lot of people during these times like to say, well, Carter, Tesla's too volatile for me to invest in. And I honestly understand kind of where they're coming from if they're more on the conservative side. But somebody like me that really cares about fundamentals and really cares about kind of the future of the electric auto space, of AI, autonomous driving, I think Tesla is so undervalued, it's crazy. And I know a lot of people like to say the complete opposite, but I have something to tell you. So a couple of things. So Tesla right now has a price to earnings ratio just at about 800. So what that means, the PE ratio determines kind of whether the stock's a growth stock, value stock. Anything historically over a 50 is considered a growth stock, right? A stock with a little more volatility and all that stuff. So Tesla is sitting at 800. And a lot of people like to say, Carter, the sustainability of Tesla is not even worth it. It's way too risky, way too volatile. And I get it. But you have to realize as well is growth stocks have higher price to earnings, right? The saying I always like to say is when Amazon was trading for under $600, it had a price to earnings at 3,200. And at the time, people thought, why would I buy Amazon? It's way overvalued. Now looking back, 5-10 years, you'd have been foolish not to take that risk. And I have that very similar mindset with Tesla. If we look at the earnings, you will notice Tesla brings in $18.7 billion. Huge surprise, almost $1 billion surprise, as well as a 3.2 EPS, also known as earnings per share. And that is also a surprise, which is fantastic, right? Looking back at the previous one, huge surprise, right? Did very, very well, $17.7 billion. So they made almost another $1 billion. So their revenue is growing, their deliveries are growing, and given that kind of the state of the market that we're in right now, where people aren't spending like they used to, a year ago, I definitely think right now we will see a little more volatility with Tesla, but looking out 5, 10, 15 years, I think the long-term outlook for Tesla is crazy. Right now, Chevron, the CEO, came out and said, we are turning to electric cars only by 2040. So who do you think is the front runner of that space? Tesla, that's all they've been producing, high quality electric cars, or a company that makes gas cars, but also is trying to take up market share of the electric auto space. Personally, Tesla is way ahead of a lot of companies. And given that, I definitely think that if they would have announced this same earnings, before we've seen sell-off from the general market, I think the stock would easily be looking at $1,500, $1,600, $1,700 a share or even more. So for me, guys, the long-term outlook for Tesla is off the chart. I am a huge bull for this stock, and I definitely think if you're not investing in Tesla, I think you're missing out on massive growth. But overall, guys, Tesla is going to be doing a stock split as well. So what this is going to do, it's going to bring down the share price. It's not going to change anything about the company or anything like that. It's just going to make it more affordable for people to buy it. They're doing a 3-for-1 stock split. So if you buy one share right now, you'll have 3 when the stock split is over. I believe they're looking right now at about August. but I could be wrong on that. But so for me, guys, absolute no-brainer. And a good strategy would be to dollar cost average this. And what that is it's a way to invest with very, very little downside. The reason why is because what you do is instead of putting up $1,000 or whatever you put up all up front and you have that $1,000 to risk, what you do is you maybe invest $100 a week over the next 10 weeks. So you still invest that total principal of $1,000, but what this is going to do is, given that there's volatility, if Tesla stock continues to sell off, you're buying all of those dips. So once the stock recovers, you make more money. On top of that, if Tesla stock continues to move up in price, you have shares to make money from it. So it's a great way to invest and one that I definitely highly recommend, guys. But overall, I definitely think we could easily see Tesla looking at, $1,500 to $2,000 in the next couple of years. Absolute, without even missing a beat, I think we could do it. So guys, that is it. I hope you guys enjoyed it. And also, we will also have another video today as well, because I told you, we're not going to make sit-down videos only. If I make a sit-down video, we're also going to do a high-end, more studio-style video. So hope you guys enjoy that as well. We'll see you guys later. Remember to stay happy, guys. Stay positive. Stay safe out there. Take care.